Let's make this 3Ds. You've got the underlying economy, which, as you say, is motoring along okay. There are signs at the periphery of problems, for instance, in the consumer confidence data yesterday. But by and large, it's motoring along okay, with employment remaining high. So the Fed feels pretty relaxed about where they are at the moment, with a downward trajectory in inflation, but albeit stuttering at too high a level. What about the markets? They're struggling to find a prop other than the prospect of lower money to keep themselves high, or certainly were in the last month anyway.
Yeah, that's absolutely right. But I'm not necessarily sure that that's going to persist. You know, when you look back at the 90s, from sort of 1995 through to 2001, we saw rates only coming down from some 6% to about 4.5%. Through that period, markets performed well. They actually returned a compound annual growth rate of more than 13% through that 6-year period. So historically, it's not been necessary to have aggressive rate cuts to support equity markets, as long as you have good growth. And of course, there was good economic growth in that particular era. Now, when I look at the indicators at the moment, I think the growth looks okay. You know, I appreciate we just had quite weak Q1 GDP data out in the US. But actually, if you average over with Q4 as well, it's running at about 2.5%, which is pretty much smack bang in the middle of the range of estimates that we're looking at. So I think inventories played a huge part in that weak figure, and I wouldn't necessarily take it at face value. I think it's probably doing a little bit better than that would suggest. The GDP now figure from the Atlanta Fed as well, backing that up, suggesting that the economy is doing okay. Now, in terms of what's going to drive the market, though, I think it's ultimately it comes back to earnings. You know, I'm a fundamental investor here. That's what the stock market is going to really care about. But it's not just earnings this year, it's earnings over the next few years. And so it's how sustainable is that level of earnings growth that we're seeing at the moment? At the moment, it's really driven, again, by the Magnificent Seven in terms of that profit share. When we look at earnings season so far, there's been a huge weight to those mega caps once again. And I think that's a little bit of a concern. You know, we want to see that broadening out a little bit in the US. And if the economy is stuttering, there's that question mark over whether that's feasible.
The Federal Reserve decided to hold interest rates steady despite initial expectations for a rate cut. But that wasn't all, as the Fed also suggested that we may not get a cut until late in the year. High interest rates are usually bad for the market because they mean higher borrowing costs for companies and discounted valuations for stocks. But at a time when demand for AI exceeds everything else, many analysts are saying the AI sector will continue to see strong growth no matter what the interest rates are. This leads us to the topic of today's video, which is ARK Invest's CEO, Cathie Wood, loading up on AI stocks like Palantir and AMD recently. But these trades are nowhere near as interesting as her third trade, where she acquired shares of a massive Tesla rival, despite being one of Tesla's most prominent supporters. So let's break down Cathie Wood's recent trades and try to make sense of them. But before we do that, if you want to keep up with the latest updates of companies like Palantir and Tesla and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Yeah, at ARK, we really focus on identifying transformative technologies, and that requires us to understand how quickly they're declining in costs, and then the unit economics of different end buyers at different price points. And so the role of the chief futurist is really to kind of manage the forecasting of those technologies. So how quickly is AI declining in cost year over year? And then how big a market is it going to be? As it turns out, we think AI software is going to be a $13 trillion market by 2030. And there's a lot that goes into like coming up with that number. And so the chief futurist role is really to kind of like guide those top-down forecasts and then control how they translate into our expectations for the individual companies.
A few days ago, ARK Invest's chief futurist, Brett Winton, was a guest on the Point Forward podcast, and he said that his firm thinks that the AI software market will be worth $13 trillion by 2030. This forecast might be considered too ambitious by some, but it doesn't take away from the fact that demand for AI software is very strong and explains why Cathie Wood is currently betting on Palantir. For the past few weeks, Cathie Wood went on a Palantir buying spree, spending more than $2.2 billion on shares in just one day. Most recently, she bought 45,453 shares in a trade that was valued at approximately $1 million. Wood has been a Palantir investor for a long time now, and she even said that she sees the data analytics company becoming a trillion-dollar company in the future and disrupting tech titan Microsoft when it comes to AI. Wood is bullish on Palantir's continuously expanding list of government contracts, as well as its growing commercial business. In fact, revenue acceleration stemming from the commercial business is the major story for Palantir through 2024 and into 2025, with revenue growth poised to accelerate from 17% last year to 20% this year and nearly 21% in 2025. The timing of Wood's Palantir purchases makes me think that she's really optimistic about the company's upcoming earnings on May 6, and she's right to be optimistic, as analysts expect Palantir to report a revenue of $625.33 million and an EPS of 8 cents, representing an increase from the previous quarter. But Palantir isn't Wood's only AI bet, as she decided to put her money into AMD, a company that is seen by many analysts and investors as NVIDIA's main competitor. So, why did Wood buy AMD? And does that have anything to do with her NVIDIA sell-offs? Let's find out. Hello everyone, and welcome back to Investocracy.
All right, that's the macro. Let's talk the earnings. Jenny Horn here with us as well. Look, Supermicro has been the really fun one, but I think we start with AMD on a morning like this because that's the one that's in the broad indexes that people are trading. It's rolling the S&P 500, and it's down, and it doesn't look like it's anywhere even close to NVIDIA, despite everybody saying they're number 2.
You know, I always have said that it's going to be a really difficult thing for them to regain this competitive edge that they've lost, I feel like, for the better part of the last 2 years now. I mean, I know that they've been more of a growth story over the long term, but yeah, it doesn't seem like they're in much better shape than what we were seeing based on a year ago. I mean, that's a little concerning. Their PC and data center revenues, though, did help rise more than 80% on a year-over-year basis. The growth was led by these, of course, the 300 AI chips, which their CEO did call the fastest ramping product in their history. However, I would say that what seems to be the focus of a lot of the selling today is guidance. I mean, that was something that was hugely disappointing, and that's due to a lot of the weakness they saw actually in their video game segment, which they said was considerably weaker than they'd been expecting. So they do anticipate now second quarter revenue to reach around 5.7 billion, plus or minus around 300 million. At the midpoint, that would amount to approximately around 3.5% higher than on a sequential basis and about 5.5% higher than last year. But overall revenue, we did see a nice sequential rise. It was down on a year-over-year basis. So where's the growth there? If we're basically trading, or we were trading on the expectation that this name is going to be a second player to NVIDIA, you have to be able to post growth.
Yeah, you're still waiting a quarter to get it. I mean, squeezing by with single-digit growth and then telling us that the next 2 quarters, we're going to eventually get to double digits by next year. It's pretty crazy that this is even in the same category of NVIDIA, which is posting hundreds of % already in the last couple quarters.
ARK Invest bought 1,658 shares of AMD on the same day the chipmaker reported its first quarter earnings. This trade was valued at around $262,000, and while that's not much when you compare it to some of Wood's other trades, it's still a vote of confidence in AMD. AMD's earnings came slightly above the expectations of analysts, but the stock still dropped because investors didn't like the company's Q2 guidance, as its numbers were very close to Q1's numbers. ARK Invest holds around 190,000 AMD shares, and maybe Wood saw a buying opportunity in AMD stock after it dipped, especially because AMD's guidance for the full year is actually good. For instance, the company raised its forecast for the sales of its MI300X AI chips, saying that it expects $4 billion in 2024 sales, up from a $3.5 billion forecast it had made in January. AMD's chips are used extensively in data centers, gaming systems, and other tech products, and the company has massive customers like Microsoft. So it wouldn't surprise me if Wood is seeing some potential upside here, especially with how bullish she is on AI. Notably, ARK Invest sold some of its NVIDIA shares last month, so maybe it's all about valuations, and Wood probably thinks that NVIDIA is overvalued now, while AMD isn't. The post-earnings share purchase aligns with ARK's strategy of capitalizing on dips to build stakes in quality names with strong growth runways. Next up, Wood's last trade for this video. Recently, ARK Invest snapped up over 18,748 shares of Chinese electric vehicle maker BYD. and the estimated value of this trade was approximately $1.02 million. Many thought this was a strange move from Wood, as she always made it clear that she preferred Tesla to the Chinese automakers. So why did Wood actually buy BYD shares? Let's try to work it out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Your latest research paper, Big Ideas for 2024, you listed your strongest convictions. Among them, you mentioned robotics, AI, Bitcoin, and also electric vehicles. You anticipate that EV sales will grow from roughly 10 million units in 2023 globally to 74 million in 2030, which is a lot, frankly, and which today I think is a very contrarian view given the increasingly unpopularity of electric vehicles worldwide. Why are you so positive about that?
Well, we believe that one of the issues, range and range anxiety, is going to change as range increases. But more important, we see electric vehicle prices dropping into the $20,000 to $25,000 range within the next 5 to 10 years. And if you look at price points historically, you adjust for inflation and you look at price points at which auto sales really take off model by model, it is around that $25,000 to $30,000 range. And so we believe that electric vehicles will scale to roughly 70% of the market by that time, and price will be the biggest reason.
As the current top EV seller in China, BYD provides exposure to the rapidly growing Chinese auto market, which is the biggest EV market in the world. This adds to ARK's existing investments in EV players like Tesla, GM, and Rivian. Cathie Wood is a firm believer in Tesla's long-term story, having previously said that Tesla is the biggest AI project on Earth and that the company could grab 85% margins in robotaxis and AI. Additionally, she has a $2,000 price target on Tesla stock. So, buying BYD now doesn't mean that she's turning against Tesla. Instead, this move likely reflects a broader strategy by ARK to capitalize on the surging electric vehicle market, even as Tesla faces some near-term headwinds. Wood believes that increased EV adoption will depend solely on EV prices going down, and while Tesla's CEO, Elon Musk, said that Tesla plans to release affordable models, that still needs another year or two. Therefore, Wood might be buying BYD because of the Chinese company's expansion plans and affordable models. Diversifying into other promising EV players like BYD also allows ARK to hedge against Tesla's headwinds, and this BYD trade indicates that ARK recognizes the shifting dynamics in the EV space while remaining confident in Tesla's technological leadership overall.
One area there's a real question out on the market right now is whether it's being judicious when it comes to the promise of AI. Where do you think we are right now in the valuation cycle for companies that touch, either right now or are promising to in the future, what AI is able to deliver?
It's interesting. We think every company has the opportunity to capitalize on artificial intelligence. It is probably going to produce the most dramatic productivity gains in history. And anyone who's used ChatGPT to help write emails or papers or so forth has a sense of what we mean now. We've been talking about AI for the last 10 years. We invested in NVIDIA when it was $5. So we've been expecting this promise to be realized. Now that we have something like ChatGPT, more and more people understand it, which is fantastic because companies know that if they do not harness AI, they're going to lose out competitively. So we're seeing, you might say, an arms race with NVIDIA. That's the hardware side of it. There will be a software side of it. Palantir is a good example on the software side. So is UiPath. But if you think about it, any company with proprietary data that takes AI seriously and has deep domain expertise on whatever the business is should be able to use AI and drive productivity gains up dramatically. And what's interesting about that is with productivity comes wealth creation. And so we think productivity will increase for knowledge workers by fourfold, maybe more than fourfold by the end of this decade. Can you imagine doing 4 times more than you are doing right now by the end of the decade in a day's work, or maybe even saving time doing it? So the changes are going to be pretty profound. Many people say, oh, are we in a bubble like in the late 90s? I was there, and we are not. We are not. Why? Because the technologies are ready and the costs are low enough. AI training costs are dropping 75% per year. And so the AI opportunity is going to be delivered across sectors, across industries, across sub-industries as costs come down.
Rather than taking a defensive stance, ARK remains convicted in its disruptive innovation thesis during periods of turbulence. The firm maintains its focus on finding companies poised to benefit from technology transformations over a 5+ year time horizon, and these recent purchases from Cathie Wood proves that. ARK shows discipline in sticking to its strategy rather than reacting to shifts in sentiment, and all the stocks that were recently picked by the firm, also including Tesla, have bright futures ahead, and that's according to many analysts and experts. However, it remains to be seen whether ARK's faith in AI and disruptive technologies will be rewarded as markets continue to experience turbulence thanks to the Fed's decision, and only time will tell if doubling down on these stocks will eventually pay off. As always, these investments carry substantial risk. For instance, being a Chinese company, BYD is considered a risky bet by some because of the tense US-China relations, and on the other hand, many think AMD will struggle to gain market share against Nvidia. As for Palantir, many analysts think its valuation is still too rich. Therefore, investors should weigh risks and do their own due diligence before deciding to invest in any of these stocks. But what do you think of Cathie Wood's recent trades? Will you follow her lead and buy any of these stocks? Let us know your thoughts in the comments section. If you would like to know what companies like Tesla and Palantir have been up to these past few days, go ahead and click on the next video on your screen. See you there.